Welcome back to the channel. We're going over the NASDAQ and the S&P 500, exactly how we're moving the market crash and everything that's happening into today, how we expected this to happen, and what you need to know going into the coming weeks to prepare for this market. Now, inflation came out today, and spoiler alert, it's hit a 40-year high. It seems like we just keep hitting these 40-year highs. And if it wasn't any news to you, the previous inflation report, yes, it was also a 40-year high. Nothing to be really shocked here by at all. Actually, going back to 1990, so about 30 years, and then here we have the 40-year coming in now. So you're seeing this really come out the gates as bad news. Then also more and more bad news. Barclays came out. Traders set sights on a Fed rate hike of 75 BPS. That's pretty big. A 50-50 odds coming in July and September of a 75-point hike. And they're expecting it possibly coming this week as well. If you don't know, rate hike is coming on Wednesday. I want to say right now, I do not expect a 75-point hike of this Wednesday. I expect solely a 50-point hike, which we're going to get into here in a second. Now, going into this right now, this is the big chart we were looking at. And as you get in here, no jokes or puns here, it does look like a McDonald's emblem, because that's what's happening to people's accounts. You're going from a tippity top, you're thinking we're back, you're thinking we're pushing back to highs. And even me for a little bit, I thought as you had this close right here that there was a possibility you're going to open up and just push back to 430 and then get rejected from that range. But boy, was I wrong. But there was one thing we needed to look at. This is what I was saying the whole time. There's no need to really buy. There's no need to trade this chop right here, this channel that we were in for 2 weeks. There's no reason to trade this whatsoever, because once you get out of this range, what was going to happen? You were going to get your movement. That was the big statement we needed to understand. I said if you break and hold above 417, you were going to move very quick to 430, 428. If you broke and hold below 407, you were going to break and move very quickly back down to most likely previous lows. And look what happened. On this move up, yes, you moved from basically 387 all the way up to around 417 over the course of 2.5 weeks. But how long did it take you to get from 408 all the way back down to 390? Took you under 2 days. Food for thought. And you're going to be pushing most likely back down to these lows down here as well. And that's where you got to fix your eyes and start focusing on. Because on today, what happened? You came down to the previous range of about 390, 398, 389, roughly right there. And you bounced, chopped, you popped up. But guess what happened for the last 5 minutes, last 10 minutes of trading? You dropped from 392 all the way back down to 389, indicating the bears have something to say and that they really have the momentum right now. The big thing here as well is the volume was extremely lackluster on this push back up, and it was dominated by the bears on the way back down. Now we're going to look at Bookmap really quick and show you what was happening here. Now going into this throughout the day, it was very interesting to see what was happening, but this is going to show you why we dropped. So all throughout the day, you had massive amounts of liquidity sitting basically on the ES between 3,900 down to 387. And basically what that represents, if you're unfamiliar with ES, it's essentially the actual SPX, the SPX futures. It's just what's happening 24/7 like the NASDAQ. It's the futures of it. The SPY only goes basically through market hours. The S&P futures go 24/7. I like to show the SPY because I know so many of you are trading this, and it gives you a better example of what's happening on the market. But really, it's basically showing that through this range right here, basically 390 through 387 roughly right here, there was tons and tons of buyers. So you can see all that represented right there. You saw CVD kind of pushing up. You had your volume pushing up and down. But ultimately, we didn't like this. But then something happened that was interesting. You saw this. You started pushing up, and at this point right here, every single buyer disappeared. They fell right off the order book. They took their orders off. They started buying up here. Whatever it may have been, they disappeared. You saw this specifically on Bookmap. Now, this is what I use. Yes, I am sponsored by them. You don't have to use them. It's actually free. You get a free trial on TOS if you want to use them. My link is down below. But in Discord, I showed everyone this for free. They didn't have to pay anything for this. They just got to see this. And you saw this disappear. And at that point, I told everyone, the next time you touch 390, you're breaking it. What happened? You pressed up to about 393, 394, and then boom, you shot down. And what happened? You broke through 390 instantly, and then you held the day basically at the end of the day, you popped up, I think on the after hours to 390, but you're chopping around there. Now, the point is the liquidity level is gone, and Monday is now fair game. You saw all that liquidity, all that volume pushing you down as well. You did have one big buyer at the end of the day, but besides that, it was very interesting what was happening there. I want to be transparently clear. I got rid of all of my positions. I sold my SPY puts. I sold my Tesla puts. Everything like that, I'm totally out right now. I am not trading this over the weekend because who knows what is going to be said with our government, because they love to spout lies and they like to try to prop up this economy. We do know that. So what's happening here? What do I expect? One, I expect if you open up Monday morning, I suspect personally, if you open up Monday morning and you're below 390, this is what's going to happen in my opinion. You're going to come down pretty quick to about this level right here. These previous lows you had about 387. So you're quickly going to start dropping to this range. And then if you break that range right there, you'll instantly drop down to 382, 380 roughly, and that'll be the ultimate test, if you will. Because what's going to happen, you're either going to double bottom around this level, or you're going to just shoot straight down and make new lows, which ultimately I've been calling for about a 360 push. But ultimately, it's looking like we can go further down than 360. I'm going to have to give you some new price targets coming on as well for more downside. But for right now, 360, 355 is the target right now. But look in here. What are some good notes? What are some things that could happen potentially to the upside? So if you come up Monday morning and you're getting a little bit of buyers, ultimately what we're looking for is just, I'm going to switch to the daily time frame really quickly for you. And as you look here, what I'll be looking for personally is a fill of this gap basically back to around 400, 401 region back here if you start to push back to the upside. That's all I'd be looking for. But when would I start trading that for the upside push? Let me make that very, very clear. So if you're looking at this and you're trying to trade this to the upside, where's the potential for that upside opportunity? Because I like to tell everyone, there's two ways you can trade this market at all times. And you have to be looking at it that way. You have to be looking at it from, is it breaking the support or is it breaking the resistance, right? Because you're always in some sort of way trading in a channel, right? So if we go back to our great example back here, you were trading in this channel. If you broke above it, you trade the calls. If you break below it, you trade the puts. When you're in the zone, you don't really want to trade it because the risk reward just isn't in your favor unless you want to trade the chop. Now, if we're coming out going into next week, what are we looking at? Now, personally, this is my opinion. So what we're going to do is we're going to clean this up really quickly for you. And I'm going to show you what we're looking at. This is our bottom zone. And then we have our top zone up here roughly at around 394 to 395. If you can start getting above this region, I'm not trading it up to here. No, I don't want to trade calls up to 395. That's not worth it. What I want to do is if we break above this level, we start to push above, come down back, that's where I'm looking to grab my calls after we break these local highs right here from today, which is Friday. That's what you want to do. After you start breaking those highs, that's where you want to trade the calls up to 401. Before that, you're not bullish. But people are saying, well, what about the put side? You just said you're bearish. Personally, I expect downside. And I know this is hard for people to understand. I can expect downside, but that doesn't mean I take the play. That doesn't mean I jump into the position, correct? Right? So I expected downside, but I didn't jump into the position until we got the confirmation on the trade. Why? Because that's the best opportunity to continue to win in this market. Right now, the 5K account, we're almost up to 12K on it. We're about 11.6, I believe, 11,600 roughly right now on that account. So as you're looking at this, what we want is confirmation below these lows here at about 387 roughly, and then that we want to trade it to new lows. And we want to ride those puts down to those lows, take some profits a little bit at 380, 382, and see if we start to break below that range. That's how you trade. You don't trade the chop, you trade the breakouts, people. That's where the money is made. And I know people are struggling to get a grasp of how that works, and I'm trying to break it down very simply for you so you can see that opportunity. Another big thing here was VIX. VIX, we've been talking about this. We said a big move was coming. We've been saying it for days. We said a very big move was coming, and I anticipated to the downside. That was my personal opinion. Guess what happened? 24.24. Boom today. Where did we go? 29.5, almost 30 bucks. The question is can we get above 30 bucks and start pushing back towards 35 when we start hitting those new all-time lows, or not all-time, but local lows for this push right now. The next thing I want to talk about, inflation, people. Inflation. What was the ultimate indicator? It was the yields. It was the yields. That's what it was. Today, what happened here? I told everyone what was going to happen. I've been saying it for days, and I kind of sound like a broken record probably. But as we look at this, you had your push down here from our last breakup from the previous lows we made. We bull flagged. Boom, we broke up. Now we're getting back to that range right there. Back at 2018 highs on the yields there. What is the actual conversion rate here? What does this mean? This means yields are inverting, and this is the most bearish indicator that there is on the economy. And what are we looking at here? You are at a 98.8% ratio for inversion. You are about to invert. If we go and look at the actual percent change on the yields, you can see right here on the side, you went up 3.68% on the day on the 10-year. In comparison to the 30-year, only went up 1%. That is very big for inflation. And the 2-year actually surpassed the 10-year as well, which is pretty detrimental as well. The other indicator I want to talk about was the junk bonds. This was the indicator we were looking at for the past few days as well when we go about to the 15-minute. This was the leading indicator to this dip. We saw junk bonds dipping every single day, and I've been trying to tell everyone, pay attention to the junk bonds. They lead the market. The Japanese yen also leading the market into a risk-off environment. They come to this point where they're establishing they do not want risk in the economy, and the junk bonds sold off major. You knew this was going to happen. We've been talking about this here on the channel. JNK. Now going over to TLT, these are the safer bonds. Also indicative of yields rising. They've been dumping as well. So we knew yields were going to pump. We knew JNK was dumping as well. We knew the market was going to take a hit. So that's what I'm looking at here, looking at SPY. Again, make it very transparently clear. If Monday morning you break above 394.8, 395, you're looking very bullish up to around 400, 401. If you break below this range right here, 390 to 388, roughly, get below 388, I may bear down to the local lows of 380 to 381 and potentially making new lows down to 370, all the way to 360 potentially. The big thing coming out next week as well, you need to be aware is you have your rate hike coming. On Wednesday, you will have your rate decision. We'll know what's coming out, most likely at 50 BPS. If we start really pricing the 75 for this coming meeting, then in my opinion, if we get a 50-point hike, you're going to get a bounce on the market. It's just what will happen going into Wednesday, but we'll talk more then. Have a good weekend, traders.